Good evening and welcome back to Be Rich. Today, I have my good friend and nephew Sashwat Swaminathan with me. So, we did talk about cryptocurrency in great detail. I also mentioned in the passing about the demise of Celsius. Celsius tried to operate like a bank, which is basically accepting deposits from people in cryptocurrency and lending it further. And it also borrowed money in the market. And this was a sham because nobody uses cryptocurrency in the real world. In what way is it different? I went to a bank here and somebody else deposited money. I borrowed money to buy a car, which is a physical transaction. The car has been mortgaged to the bank. The bank can seize the car if I don't pay. There is a central bank which acts as the lender of the last resort and which will in turn ensure the depositor's money in case the bank goes bust, and will also lend money to the bank in case there's a liquidity crunch. A liquidity crunch comes when all the depositors want to come and take money immediately, whereas all the assets that the bank has lent will return money over a longer period of time. There is an asset liability mismatch, and this asset liability mismatch is met by the central bank. This has been true for the last 80 years. This started with more than 80 years. In fact, it started in 1913, 110 years. This was started with the Federal Reserve, which stepped in as the lender of the last resort. But it took 30 years for it to evolve because during the Great Depression, the Federal Reserve did not do its role as a lender of the last resort. A lot of banks collapsed. And then it took the reforms of Roosevelt to define the role and modern banking as we know it. But it was a history that has come over the last 300 years. But in the case of cryptocurrency, the people who borrowed money against those deposits were basically speculating in buying more money, and they were basically using the deposit money to buy more of the same cryptocurrency. Yes. And basically using leverage to pump up the stock. And when the economic conditions turned, the value of the cryptocurrency dropped, and the people who bought on leverage could not refund it, and therefore the depositors lost their money. And today, as I speak to you, Celsius has filed for bankruptcy protection in New York. More such bankruptcies are expected. But let's go ahead, and this is the short gist of what I said. Let's discuss with Shashwat in greater details. He has greater details for us.
Right. So there was a scathing article in the financial report which basically ran over the Celsius fiasco from start to finish. So these are some of the questions I came up with and some of the points which I want to discuss with you today. So the first point being it's more of a victory lap. So there was a video which Leon from Celsius had posted to Warren Buffett mocking him, saying, "Old man, I've planted a tree under." So he mocked Warren Buffett's saying of "plant a tree so you can live in its shade." He mocked it and said, "Old man, I've planted a tree of financial freedom, and generations will come." And that was during the peak of the Bitcoin crisis. Warren Buffett did not comment then. Warren Buffett did not comment now.
But what was it? What did he say fully?
But he touted cryptocurrencies and said that transparent transactions. I've planted it. So he put a twist on that proverb and said, "I've planted a tree of Bitcoin, and future generations will enjoy transparent transactions which anyone can see, and which will revolutionize the financial system."
And this is what he took a punt on Buffett.
Yes, he took a punt on Buffett. He said, "Warren, Warren, Warren." He started a video of like that, and he continued saying what he did.
Yeah, but this is not new. Warren has seen it before. Warren saw it in 2001, 2002, when everybody said he missed the tech bubble and everybody made fun of him, saying that he lost touch. Buffett was 70 years old. That was 20 years back.
Now he's 90.
Now he's 92. But at the end of the day, Buffett smiled all the way to the bank as the tech collapsed. And in recent times, Elon Musk made a very nasty piece of quote about moats. He said moats are quaint, and the only moat that he knows is a fast pace of innovation. And all those moats that Buffett were talking was in the past.
Right.
Before Buffett could respond to that questioner who questioned him, Charlie Munger came in and really roundly chased Elon Musk indirectly. Within a year, what has happened? The value, Mr. Elon Musk, who lives on leverage, has lost a lot of money. He's fallen from $1,200 a stock to $700 a stock. He's unable to close the transaction through which he said I would buy Twitter. He's the case of sour grapes. He is now clearly doesn't have the money to buy Twitter. Twitter has taken him to court.
Right.
It has never happened that Charlie Munger backed out or Warren Buffett backed out of a deal because they didn't have money or they have not committed to buy a company and not bought it. So the joke is on the crypto guys.
Right. So I thought you'd enjoy that tidbit of information. So moving on to the serious questions. So first off, you had already hinted that Celsius was met by a run, a very typical bank run. But in this case, it's even more pronounced because it's cryptocurrencies and they have no banking regulations of, a reserve ratio and all that. So they've frozen their transactions as for now. What does it mean for the people who have put money into it? And can you see similarities in India where certain companies have done the same thing?
Oh, a lot of companies have done the same thing. What happened in DHFL, Divan Housing Finance, is very similar to this. But at least they had assets to which they lent it,
Right.
and people got back some money. So the same thing happened with IL&FS, which said no to its bondholders. Uday Kotak had to come and take over the company, and he recovered only about 60% of the money before he gave up. So this is a common theme in India, but at least there were some assets.
Right.
But here in this case, there is no assets.
It's all cryptocurrencies.
It's all cryptocurrency is worthless.
Right.
It is going to go down the drain further. I said in a previous meeting, there are 2,500 coins. We don't know which coin the depositors have, which coins these guys have leveraged and bought, and what is the value, what is the tether that is holding on to the US fiat currency. This is going to be a terrible thing. Most of the depositors will lose their money.
Right. So, coming to my next question, what was Celsius trying to do when they created this sort of platform, which they said is, I mean, it's very muddled. So I'll run you through what over the period what they've claimed their service is supposed to do. One, they've claimed that they're acting as Robin Hood or something, where they're taking money from the top 1% and giving to the 99%. That's one claim which they've touted. Number two, they're saying they're making banking accessible for everyone. Number three, they're saying that this is the new guard and the new guard will replace the old guard of sound financial, or rather more sound, I should say, than what is currently being touted by them. So what is which claim do they really focus on, and what is their actual intention with what they're trying to do?
I think the whole thing is a cock and bull story, because a genuine bank gives you currency with which you can buy assets.
Yes.
Or buy something you want to consume, and you pay it back over a period of time.
Yes.
Or they give you a short-term finance for building your house, or a short-term credit for running a business.
Right.
Now, in this case, they accepted money in cryptocurrency and gave out money to people who wanted to buy more cryptocurrency. So if you say to the guy who's deposited cryptocurrency that I'm giving you 12% return, the guy who is supposed to be taking that cryptocurrency must pay you 18% in interest.
Yes.
And his profit should be 24%.
Right. For him to be worthwhile.
For him to be worthwhile. At least I make 6%.
Right.
The bank makes 6%.
Right.
And the other guy gets 12%.
For the whole deal to be
working. Now, what does this assume? That cryptos will keep on going up.
Yes.
Now, the underlying assumption is we have the first mover advantage. More and more people will come into crypto, and so the price of crypto will keep on going up. Okay. They use the word currency.
Yes.
A currency has two functions.
Medium of exchange, storehouse of
value. It cannot remain only a storehouse of value.
Right.
If it remains only a storehouse of value, and currency keeps on getting more and more expensive, they are all going to take the currency and put it inside their pillow and not use it.
So it will never become a medium of exchange.
Medium of exchange. So it was never a currency.
So this is Gresham's law, where bad currency will push out the good one.
Bad currency will push out the good one.
Yes.
So basically this was a violation of that. So when the Fed started to tighten, loose money was not available to finance this whole thing.
Right.
So it started to crack.
So nominally the price of Celsius stopped going up.
Yes, of all crypto coins.
Yeah, not only
Celsius is the platform.
Yeah, and they have a coin called Cell.
Cell. The price of Cell didn't go up.
I think it's aptly named as well.
Yeah, none of them went up. Bitcoin cracked. the mother of all this or the father of all this is Bitcoin.
Right.
It cracked from 17,000, and yesterday or day before I saw it at 18,900.
Yeah.
So that's a nearly 70% fall.
Yes.
And now it's clear that the inflation is at 9.1.
9.1.
The Fed might increase, definitely going to increase by 0.75,
Right, definitely.
and they'll push it up by 1. If Fed increases by 1%, you're going to have another bloodbath in the cryptocurrency market.
Right. Okay. So moving on to my next point. So basically, Leon and Co. had basically sold their so Cell is their in-house cryptocurrency, which they tout as their so-called currency of dealing. So they had sold their tokens back to the company, almost $11.5 million of tokens sold to back to the company only by Leon.
Yeah.
Who's in charge of this whole thing.
Yeah, and he collected cash.
And he collected dollars.
Oh.
He sold it in the back to the company for dollars, $11.5 million. And that's one point. And second point, the CEO of Celsius sold $44 million unofficially. So officially, he had sold only $500,000 back in 2020. But after techies and hackers had started looking at, because everything's out in the open, there is a huge trail, right? So much for the claim of being untrackable. They traced his accounts, and it turns out that unofficially speaking, which he hasn't declared officially, $44 million worth of Cell has been sold by the CEO of Celsius
and converted to dollars.
This
is a classic Ponzi scheme. So he knew before everybody else,
right,
that the ship was sinking.
Yes.
Now, normally a captain of the ship is supposed to sink with it.
The last person to sink.
He should be the last person to leave the ship.
Right.
And if he cannot, he has to sink with the ship. Unfortunately, here the captain was like a rat, ran away first.
Because he knew.
He knew what was coming.
Right.
So he safeguarded $50 million for himself.
Right.
So out of this entire Ponzi scheme, he's made a $50 million.
Right.
And he has the nerve to talk to
Buffett. And in fact, one day before transactions were frozen, he had replied on Twitter saying, and a lot of these company executives are on Twitter and they openly talk in Twitter. So he replied to one of the comments saying, there's so much bad news going around. What is happening? He said, we are all about customers and we are going to, have you ever seen any customer with any problems in withdrawing their funds? The very next day, he froze the funds.
So he knew the ship was sinking.
Yeah.
He knew his Titanic was sinking, and he just took off the money with it.
Right. And so the financial system has gone through multiple. So this is something which I discovered or encountered upon while reading the article. The financial system has gone through multiple stages of this because crypto enthusiasts tout that there is too much regulation, and this is a way to flout regulations, right? And
this what will happen if there is an unregulated entity?
Exactly. But the thing is, before the institution of the Fed, which was set up to keep these banks in check, there was a wild west in terms of banking.
That has gone on for years.
Right.
You can start with the South Sea bubble.
Yeah.
Where he took on the entire government debt and did the same Ponzi scheme. Under King George and did the same Ponzi scheme.
Right.
And lot of people got together, wanted to buy and sell and make some money on this.
Yeah.
The great Isaac Newton suffered a huge loss in the South Sea bubble.
Yeah, 7,000 pounds back then.
Yeah, 7,000 pounds back then. And now you can understand how intelligent men have lost money in this.
Yes.
So-called intelligent men have lost.
People like Naval Ravikant, who you said is a science. Even Newton was a science guy. Right.
So, and you are talking about Peter Thiel and all these guys.
Yeah.
They have all lost money in this.
Yeah.
So they had so much money. This represented a very small portion of their fortune. So they were willing to risk it for a big gain.
It's a moonshot bet.
A moonshot bet, and they lost it.
Right.
But millions of people who got into this, they could not afford the moonshot bet, and they had a big loss. I keep on telling you, history may not repeat exactly, but will rhyme. This is a South Sea bubble and Mississippi bubble in place.
And good that you had come to the point of the South Sea bubble. So there are a few similarities, or actually a lot of similarities between how the South Sea operators had acted with Celsius. So there's a lot of similarities. One similarity which I discovered was South Sea operators selling their own stock in the market silently, without everyone knowing. And number two, which I noticed was, so this is another fact which I wanted to bring to your attention. So Celsius had claimed that they were paying 18% yield on interest.
I said 12.
Yeah.
If they are paying 18,
Yeah.
then you need at least 30% margin.
Right. And I'll tell you on which accounts they were paying this is where the dubious part comes in. They were paying 18% interest back in Celsius. So cell currency. So if you were willing to accept your interest payment in cell currencies, they'd pay you 18% on
That's
it.
like what the paper it's printed on.
Exactly. So that raises questions to how sound their scheme was and what kind of nonsense was going on under the hood. And number three, they were helping out favored parties in terms of lending. Again, South Sea Bubble did the
Yes,
same.
exactly. The history rhymes.
Right.
Only the names change.
Right. So it spent $350 million to keep its own token prices up.
So basically, they were buying their own stock to keep it up.
Yes.
And while the owner was taking his money out.
Yeah.
Now there is going to be a lot of bloodletting in the court.
And finally, coming down to the investments they had made an investment in Badger DAO, Canadian company. It got hacked in 2021, and this was another claim which crypto enthusiasts make: crypto can't be hacked, right? Badger DAO was hacked in 2021, and they issued new tokens. So the previous tokens, they said, boss, let's leave that aside. I'll issue new tokens to you, and I'll give you a right to all my future profits.
This is where basically Gresham's law.
Yeah.
Good money, bad money.
Yeah, and he said, he'll sell you the right to all future profits, but there being no future. This is exactly like the South Sea Bubble.
This is South Sea Bubble and Mississippi Bubble, where you had an exclusive rights to trade.
Right.
For people who really want to understand how this works, they should read J.K. Calvert's book, A Short History of
Financial Euphoria.
A Short History of Financial Euphoria. He says how leverage is used and how unrestrained leverage can destroy a financial system, and that's exactly what has happened in this.
And finally, I'll come down to the closing points. The closing point being, so they made a claim saying they had 1.7 million users. After digging, these techies and ethical hackers had finally found out that the claim of $1.7 million was a big bubble waiting to be burst.
Users or dollars?
Users, 1.7 million users, and it was waiting to be burst because the actual numbers were in the 100,000s.
Whatever, it's an absolute sham. And imagine the gall of the man to take a shot at Warren and Chadi.
Yeah.
This is the joke, and the joke is on these guys.
Right. And that's all I have for you today.
This is a great thing, is a great eye opener. I hope people understand this and stay away from such nonsense. Thank you for watching Be Rich. If you like this video, kindly hit the like button, press the subscribe button, turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.